Hey, Walter here. And one of the questions that came through from one of the traders I'm working with is about the end of the trend. And you're looking at the open position ratios for the retail traders right here. And he was asking about the yen and was saying, it looks like that the yen could possibly be getting to the end of the downtrend. And, what do you think about that? So it's basically what he was looking at. And let me show you the chart, and I'll talk to you a little bit how I use these two things together, the open position ratios and the charts. So this is the 12-hour yen chart, and it's pretty clear that the market's making lower highs. For example, this high here, we had another local high here, nice wicky one, another one here, another one here. Now we did make a higher one here, but then after that we made also a lower low here. So that was your low there, but then you made a new low, and then you made you made a lower high. And then we made a new lower low because that was lower than that low and that low. And so now the question really becomes, what's going to happen here? This is a kangaroo tail. Well, it was nearly a kangaroo tail, I think, on the 12-hour, but the reality is it's what we call a busted kangaroo tail, which is basically when the market goes to the stop loss level before it goes to the sell stop entry or the buy stop entry. In this case, it would be a sell stop down here below the candle low. So you miss out on those losing trades, on the very worst trades, by putting a sell stop in here. And you see that the market goes to the end of the tail where the stop would be, and so you're like, not going to take it. So the question now becomes, are we going to break this level here, basically, which is the top of that recent high? And my suspicion is that because the open position ratios are so trendy, and I'll show you what I mean by that. Here you can see the yen. I'll show you right here. So this is current. So the open position ratio for the yen is 76% long. Now what that means is most of our trader buddies, sorry, not the yen, it was the Kiwi. I've got the yen on my mind because I'm in a yen trade at the moment, which is actually going pretty well at the moment. We sold on the back of this double top up here, and it's falling. And if you want to get in these sorts of trades, you can go to the link below this video or above this video, or go to bigprofitscourse.com and see how we're using money management algorithms and naked trading to grow a small $1,000 account up to $100,000. That's at bigprofitscourse.com. But then the yen is one of those trades that we're in right now. So the key here really is, what is the crowd doing? Now, a lot of people know about open position ratio, but they've heard it in relative to the experts or the pros. These are not the experts we're talking about. These are the traders that we have to earn our money from. So these guys largely take really small winners and really big losers, and they fade the trends. What I mean by that is when they see a trend, they go against it. So typically when the market's going down, you'll see a lot of buyers hopping in because they think this is the bottom. Okay, no, this is the bottom. Oh, no, this is the bottom. Okay, this is the bottom, right? And when it goes a little bit in their favor, they typically take really quick profits. And this is one of those things that you can check for yourself, actually. You can look at these data. In fact, here it is right here. You can see for the Kiwi pair, the average winning percentage of the retail traders, this is over 43 million trades, looks like it's slightly over 50%. Looks like it might have been about 52% win rate trading the Kiwi, but, and here's the kicker, but the average loss looks like it was about 78 pips. And then the average win was only 61, 62 pips. So that's why these traders are such a great tool that we can use. And so because I see that the market is still largely looking for the Kiwi to go up, I told my trader buddy, hey, I don't think this is the end of the trend. Potentially, we could see some traders come in and slam this sucker back down when it gets up to where it peaked out here and where it peaked out there. That'd be a pretty good resistance level to look for a naked setup, like it's some sort of whammy, a moolah double top, or a ghost peak, or like a kangaroo tail, or even a big shadow or something like that, where you have a signal that, yep, that's the end of it. So it may get up there. It may actually get up there. The other thing is, this is Friday, and Friday is often reversal day. So this is Friday right here. This candle will be another 12-hour candle. This is Thursday. This is Wednesday. This is Tuesday, and this is Monday here. So the interesting thing that I want to point out here is look how Monday, these two candles, it went down. But actually, overall, it made the low here on Tuesday, and overall it's been up on the week because the week, of course, opened right here. Oh, sorry, it opened right here, and we're up on the week. But typically, so Monday went down a bit. Typically, Friday is also kind of a sell-off too. We also have the non-farm payroll today as I'm recording this, which isn't really that critical, or not as critical as it used to be. So I would expect that we'll probably see a bit of a sell-off here at some stage, whether it's today, Friday, or early next week. And I think one of these, probably this area here, will come into play when that happens. And the key here that I want to get across is I'm using this. I'm using these data here and this important number here, which says 76% of the retail trader crowd is buying the Kiwi. What does that mean? As soon as it gets over 70%, I know that it's in a really strong downtrend, and vice versa. It works the other way too. So, for example, you can see here that 78% of traders are selling the USD CAD. Now, sometimes the chart doesn't actually align up with that, and I'll show the CAD right here. Because they're all selling the CAD, I think this CAD is going to break out. Now, I've drawn this line on my chart, this blue line. I think it needs to really break above this line here to get me excited about buying. So I want it to break out and then come back down and bounce off of it. But the important point here is that I have a bias. And, you know, as currency traders, we forget that we don't have the major advantage that share traders have. When you're trading the stock market, almost all of the share traders, they just buy. They have one question: is when should I buy and when should I get out of it? When should I buy? When should I get out of my trades? They don't think both ways like we do, because, you know, typically, I mean, historically, you're always going to find a range-bound currency pair. Like the euro, since its existence, is basically traded, I think, between 87 cents and $1.62 or something like that. So it's basically a range of about 80 cents. So, and that's what you see with most currency pairs. As exciting as it is when it moves, those moves are actually pretty small. It's just the leverage that makes them exciting for us. So I really like the idea of buying the CAD here, and I would look forward to do another sort of explosion and a pullback to this level, and that's probably where I'll get in and look to buy. And again, the reason why it's so easy for me to pick a side is because I see 78% of my traders here are selling the CAD short, so obviously they've noticed that this is a really bullish look. It isn't that the retail traders are making the market go lower, because, of course, we retail traders make up a very small percentage, 2 or 3 percentage points of the entire Forex market. And even then, it's only when our trades are passed through to the real interbank market. So it's really kind of, in other words, sometimes that doesn't happen if you have a small account or you've shown to your broker that you are not making consistent profits. They might just take the other side of your trade. So that's really important to note here. We talk about all these topics and more in a Small Accounts Big Profits course. You can go to bigprofitscourse.com to learn more about it. Otherwise, I'll catch you in another video. Take care. Bye.